Evan Lucas from IG joins us from Melbourne. Evan, great to see you there this morning. Overnight leads from the US market, pretty positive it would have to be said. SPI's still fairly flat. What are you looking for at the open?
Yes, good morning, Kate. Look, obviously overnight we saw the earnings continue to drive the market higher. Companies like Pfizer and Valero really drove the S&P back up again. We saw it up about 0.5%, 0.6. As it's moving into the close, it's currently at about 15.08. Look, it's holding above that sort of 1,500 point barrier. It means, therefore, it's only about 4 or 5% off that all-time high that we saw back in 2007, that 76 points. So it's only 60 points away. Global markets are on a bit of a tear away. The S&P is now up sort of 10 out of the last 11 sessions. And the main thing that we're sort of looking at is that the earnings for season is still basically in its infancy. Only 35% have reported. However, 65% of that is up on the revenue line. 76% of companies are outperforming on the EPS. Norm is normally about 65. Analysts obviously always a little bit conservative on that, but it does tend to mean that the market is sort of tearing away because earnings are certainly beating consensus. Other thing that we're sort of looking at... Oh, sorry, Kate.
No, sorry, please continue.
Look, the other thing that we're obviously looking at particularly is, the last sort of safe haven asset that we sort of watch quite closely is yields. They've been trading in that sort of 137, 197 trading range probably since about March last year. We saw again last night that they broke out of that sort of 2%. They've dropped back a little bit this morning, but we are looking at they are retracing that sort of 61% retracement line from the March high. Our view is that if yields move back up to that sort of 2.3, 2.4%, we'll see more funds coming back into the market. Okay,
Wesfarmers reporting today. What are we expecting to see?
Yeah, look, Wesies are reporting today. It's been a bit of a tear away from the last sort of June. It's been up about 20%, and it has sort of led the market. It's already up 5.4% this year, and is leading the sector. I mean, Coles has been a fairly stellar performer for Wesfarmers over the last 18 months. We've seen that it's been a bit of a defensive play for the portfolio holder over the last 3 years. It's been trading between sort of $26, $20, sort of $35 mark. It's been offering you about sort of a 4.5, 4.7 fully franked net dividend yield, and it's been a bit of an easy sell for people. So we've actually seen it obviously break out of that $36 mark. It's kicked up to about $38.80, and when the figures come out at 11 a.m. today, things we're looking for is sort of the Coles growth. Consensus is between sort of 4.5, 5.5 growth, excluding fuel. Fuel's been a bit of a lag, and it might pull it back down a little bit to more along the lines of about 4. We do expect Coles to outperform Woolies. We'll see a little bit more of that tomorrow when Woolies come out and report then. Bunnings continues to be relatively strong for Wesfarmers. We're expecting about a 5% growth on the sales side, and also outperforming again on the Woolies side there. Look, the one thing that we'll be watching quite closely is the consumer discretionary side of Wesfarmers. Obviously, Target and Kmart is the ones to watch there. We are expecting a slight decline over compared to the quarter before, roughly about sort of 1.5 to 0.8 for Target and Kmart respectively. Look, the pressures obviously come from the consumer discretionary side. We've seen obviously, unfortunately, some fairly poor performances from our market with regards to economic figures. Consumer sentiment has been down a little bit, and we probably will see Target and Kmart come a little bit sort of lower on that. One thing that we are noticing from the overnight sort of figures that we are looking for to our market today, obviously we talked about before the Case-Shiller housing index, really saw DR Horton take off, and the ones that we'll be watching today are sort of your James Hardie and your Boral. Really good exposure to that US recovery, really moving into that self-healing thing that's going on in the US, and we should probably see those two move further today as well. Okay,
James Hardie and Boral, watching those at the open today. What else should we be watching in terms of the major index today? Because I can see commodity prices mostly higher overnight. We've got that strongest US lead. How does that set us up today? And we're trading at 4,000. Still in the 4,000s. How much longer until we reach that 5,000 mark, do you think?
Okay, look, obviously we've seen a really stellar performance yesterday. The ASX was up 1.1%. However, if we look to the S&P futures, it is flat, and looking to our market today, we're also calling it a bit flat. Look, we've had 9 out of 9 sessions on the up, hoping for a 10th. However, obviously we have had a bit of a tear rate, and we probably may see a bit of a pullback in some areas. As you did say, obviously commodities were quite strong overnight, and if we look at BHP's ADR, it is up to 37.50. That's a 33 cent jump on yesterday's close. If we look to the UK, Rio and also BHP were up almost 2% overnight. Pretty strong performances. They are following on with the fact that the iron ore price is still holding at that sort of 148 level. and the materials and energy sector over in the UK led the way, so hopefully we'll see that coming towards today. Risk also was sort of switched on slightly overnight. We saw the euro and also the Aussie dollar outperform the US dollar, with the euro making a sort of a 52-week high. So look, we will probably hopefully see commodities move up. We also saw gold trending a little higher. Yesterday we saw 6 out of the 10 worst performers being the gold stocks. And having a look at sort of Newcrest ADR and also what Barrick Gold did over in Canada and the US, it is pointing to a modest gain, and we will probably see the commodity sector of the gold area sort of trading a bit higher. So where are we looking at possibly a pullback today to cause that flat area? Look, the banks have had a really stellar move. We saw Westpac and also NAB sort of move up almost over 2% yesterday. Really, really strong gains. They are now hitting their RSI levels of about 78 to 80. That is sort of touching overbought levels. However, we do note that somebody like CBA is going ex-div on the 18th of Feb. They've already declared $1.57 for that interim dividend, and you probably will see the CBA sort of play all the way up to that dividend date as they move forward. So, look, we probably might see the financial sector particularly sort of pulling back slightly today, but all in all, it'll be a bit of a flat start and watching the commodities and also the energy space.
Okay, Evan, lots to contemplate at 10 a.m. Thanks so much for the wrap. Now for the latest on the flood crisis. River levels across New South Wales and Queensland are beginning to fall after both states were engulfed by severe flooding. A search and rescue for 2 men missing in the Lockyer Valley will resume this morning. It brings the number of people missing from the flood disaster to at least 4. Another 4 people have been confirmed dead. For more, we are now joined by Sky News reporter Aaron Young, who is in Brisbane this morning. Aaron, what's the latest?
Kate, good morning to you. The search resumes this morning for the 2 men in the Lockyer Valley at Gatton, which is around 90 kilometres west of Brisbane. They went missing.